Hello, traders. It's 8:01 a.m. Chicago time on Tuesday, the 13th of October, 2020. This is episode number 1857. Thanks for joining me today yet again. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we have a bit of a mixed bag to slight lean to safety today. The leader today is crude oil up 53 cents or 1.34%. The Nasdaq's holding tight. The Nasdaq actually put up a higher high versus yesterday's session, while the S&P did not. The S&P has been completely imbalanced and sitting sideways throughout the session. The S&P is down 13.5 points or 0.38%. We're trading in yesterday's range, which was relatively wide. The bonds are up 14 ticks. The 10-year notes are up 5.5 big ticks. And the dollar is up 10.5 cents today. The laggard today is the Russell. The small caps are off 18.4 points or 1.11%. Gold is trading at 1908.9 or down 1%. So that's where we stand this morning. In terms of what's on the calendar, what was important this morning is that J.P. Morgan released its earnings for Q3 at 7 a.m. Chicago time, 8 a.m. Eastern, and they came in at $2.92 versus $2.23. Pretty strong. 30.94% surprise there. Revenue came in strong as well, 29.94 billion versus 28.29 billion. Delta took a bit of a hit. It was off. The earnings were off by 10%, and revenue was off by about 1.5%. Johnson & Johnson also came out, but also attached with that is Johnson & Johnson has paused clinical trials of its coronavirus vaccine candidate due to an unexplained illness in a study participant, delaying one of the highest profile efforts to contain the global pandemic. So Johnson & Johnson not too well today. Citigroup came out with $1.40 versus 92 cents. Citigroup beat by 52%, with earnings up 17.302 versus 17.220 billion or 0.48%. So those are the big ones. The calendar itself for today, we did get the German zoo economic sentiment. This is a major number for Germany. Came out a lot weaker at 56.1 versus 70. That number came out at 5 a.m. Eastern time. Again, the zoo economic sentiment for October came in at 56.1 versus 70 expected. And core inflation in the U.S. came out in line across the board. Really, not much there. We still have IBD economic optimism at 10 Eastern. Not really expecting much there. Consumer inflation expectations at 11 Eastern, expecting 3%, and then that pretty much wraps up the day. So that's where we stand today. Let's take a look at what was expected yesterday versus what we got. So yesterday, following a pretty strong trend up in the overnight session on a jagged profile, a lot of price discovery in the overnight session, holding this trend line that you see before you. The expectation was we are likely, because we didn't let go of the high and we did have a weak high up here, the expectation is we're likely to push to 35.06 and sit sideways and rest after two gap days in a row. Completely wrong there. That combined with the bank holiday, really didn't expect it to run much. Well, that was really a bad call. I mean, there was no way for me to predict that it would do this, but here's what we got instead. We consolidated at the open for just a little bit, for about the first 20 minutes or so, and off to the races we go. And not only do we go, but we go with very few retracements. Even using rotational statistics, we end up with these massive pushes. So if you look at this push from this low to this peak, let me turn these off. They're confusing because they reflect today's numbers. We see a pullback of just 3 points. So it does not reset the zigzag indicator because it's looking for 17 ticks. And so it continues to the next leg, and then we finally get a 17 tick plus pullback. This is really a strong trend, and so plenty of warnings went out to shorts in the Convergent chat room. There was just no reason to get short at all once we saw this break higher. The relative strength of this, comparing the rotations up versus rotations down made it very clear that this was likely to push through quite strong. There were a couple of opportunities where it seemed like it was pretty much done, but the pattern I was looking for to determine whether or not it is done is an impulse continuation and then an attempt at the high that extends below the most recent low, in this case right here. This would then invite a push, a scalp short into VWAP or mid consolidation there, and if it has any legs, it could turn around and continue directionally. The fact is the market remained above the open, above the IB. This was a trend day yesterday. Did not see this pattern until right here, the start of this trend line. In fact, I pointed it out in the Convergent Head Trader channel that there's just no reason to get short. Yes, it's come really far, and we are quite far from yesterday's close given this gap that we left beneath us. But there's no reason to look for a short, and if you do, you want to be very vigilant with a short. No reason to look for the short unless we have a lower high and a break, so it creates this opportunity to get short in this area here for a rotation down, and even then you have to really hold. Sorry, I had to cough there. You have to really hold against some real headwinds from the buy side. So we finally rotate down, and then we break that trend line higher into the close. The overnight session did not extend itself higher. We ended up holding a lower high in the overnight, and we are holding steady and maintaining steady at this upper distribution from yesterday. So as long as we're currently trading 35.19, we are right here, basically. You can see it ticking right there. We really have not given up much territory from yesterday's push. Given yesterday's push, given the gap up, and given the run and the range, we want to pay particular attention on failure down. Large impulses down indicate that a lot of this volume that went off in the upper distribution is likely to find very little support and likely to find its way back to yesterday's open, particularly the 3,500, the 3,500 back to the 3,500. That would bring us into balance a little bit. Here's what's happened overnight. So this is that same trend line from yesterday that was built based on Friday's low and then the overnight low while I was doing some homework, which held pretty well throughout. That trend line is no longer valid. Let me toss it. And so far, what we do have is a market that has established balance on pretty good volume, 309,000 contracts. The rotations, the real rotations, were to the negative side today. Any rotation up got an equal, basically was contested. So you have this Nice rotation up here, and then it pulls back. And then right now we just breached this short-term trend line on the 15-minute. It's looking kind of weak. It's looking like it is likely to seek this low and move through the overnight low at 34.10. That's how things are shaping up. It's looking like the structure and the market, the market structure right now is relatively weak. Okay, so there's a lot of confidence from the buyers, but overall we have a lot of gaps beneath us. So let's turn these off. So when we look, so we can kill this fib because we are way through it, very, very close to the all-time high. If you look at the market structure, gap, gap, gap. This is not good market structure, the type of market structure that we would expect would hold a sustained attack on the high. We would expect this to repair a little bit. The best market structure for sustained movement is push up, pull back, consolidate, push up, pull back, consolidate, push up, pull back, consolidate. That's pretty sustainable movement. And we saw that yesterday in the daily fractal and in the day time frame. We did see this kind of action, but on the day to day, it's really broken up in the RTH session. Okay, and so to me, this looks like, although we did successfully push through that 3403 and squeeze into this thin zone like we expected, like we talked about last week, we did accomplish that. It has gone quite a bit, and the structure beneath it is one that is likely to be tested. And if it does, my point being, I don't know, I'm not saying today's the day it tests it, but the point being that if it does, it's got a lot of holes to kind of fill, and that movement can be very, very quick. This is what we saw here. You have a gap there, and then all of a sudden you have this very strong, in just a day we take back 2 weeks, or 2 days we take back 2 weeks worth of rallies. This is basically what I'm talking about. We're making another thin air run at the high. That is the point. And in a thin air run, you cannot keep this big old airplane flying steadily. It is likely to run into turbulence, and when it hits an air pocket, it loses a lot of altitude. That's to put that in an airplane analogy. That's basically what I'm going after. Okay, so just remember that we still have a one-time framing up. Higher lows, higher lows, higher lows. So in order to end that one-time framing up, we'd have to breach the low from yesterday, which was at a key area at 91 and a quarter, 92. I talked about that level yesterday. It's a high volume node, and it had some structure from the overnight session, and we could see as it was pushing down, it was really struggling to squeeze price, and so we had a good turnaround. We don't see it clearly very often like that, but it had a turnaround at about 91 and a quarter yesterday. 92.50 entry was ideal. Unfortunately, we don't really see this kind of a rally, so it's hard to hang on to those kinds of trades. But at least in my time frame, because I am always playing both sides of the market, and so it's hard to hang on to those. Anyway, so that's what we had. That's the kind of big picture. We're getting some pretty good participation from Delta here. It's picked up. Delta's moving with price from the low. As you can see here, this is matching. We just keep pushing delta higher with price. Range picked up yesterday, volume picked up yesterday, and so that's what it has going for it. So today it's really important to monitor for the quality of the move down, and of course 91 quarter ends the one-time framing up on the day session. Here's what the overnight session looks like. Okay, so that's where that stands. As far as bookmap, looking at CT bookmap here, it has explored. It looked like the turning points in the overnight session did see some collisions. We did have a pretty active two-sided trade in the overnight sessions. You can see here, it's it's moved up to the liquidity pool here and collided, unable to continue, pulls back, comes back to the collision zone, and then continues. This is a classic scalp setup for me. Same thing, almost the same thing down here. We have a liquidity pool, a nice bid there. It collides, pushes up, comes back to the bid area, and then explodes the other way. It seems quite orderly in terms of how it traded overnight. Pretty exaggerated moves. We have, from here to here, we've got a 20-point move, and we've taken a lot of it back. There seem to be both sides, both participants, the sellers and the buyers, are quite active in the overnight session. As I said, it looks like we drop and we pop. This may have been on the zoo. Actually, the zoo was in here somewhere. So we have a drop and a pop. We have a drop and a pop. It's doing a lot of that. We have a pop, drop. So it's two-way action. We expect that to carry into the overnight session. We do have two distributions, one at the point of control at 35.19. That's one key distribution here, right here. And then the second key distribution is up here in the 26 or so. So we'll keep an eye. We're stuck in between two distributions right now, and we need to keep an eye on how the market treats it on the open. Okay, so let's take a look at what's expected for today. I'm going to move on. Let me just set this chart up. Okay, let's see. All right, so here's what we're looking at for today. Primary scenario. We got to keep an eye on the big tech. The big tech was strong, slightly strong overnight. We did put in a higher high in the NASDAQ, and we're holding a key area in the NASDAQ that was tested early at 12,120. Here's the NASDAQ. Nice stock zone here. Good job by the person in Convergent doing these stock zones for the NASDAQ. It's been doing great. So here's this area right here in the NASDAQ that we are holding on to, a nice low volume node. It's the first key low volume node. The one below it's right here at 46. If it holds this area, the expectation is it gets back, the NASDAQ's likely to get back to 12,212 for a test of the overnight point of control. If it does that, then the S&P is likely to move with it. So just know that the NASDAQ took out its overnight yesterday's high and has fallen back in range, has not tested the prior point of control yet at 085, and may do so at the open. So I'm going to keep a very close eye on the big tech companies, the Fangman stocks, and see which way they lean. We're likely to go in that direction. My suspicion is that we are likely to open. We're opening in the thick of it. We're opening against the point of control. We're likely to open choppy, test down, consolidate, and an impulse up and take out this this area at 30 at 35.30. We've had this kind of shelf here at 35.30, if you see it right there. So this is 30. Expecting to butt up against it and push through pull back, and then continue the impulse from yesterday. That's the primary scenario, is to continue the impulse from yesterday, test above, move into the 35.48 mid-century figure, and come back into the close. This is what I'm looking for today, giving us approximately 35 points of range or so. Okay, and then the secondary scenario, volatility is still pretty high. The secondary scenario is a grind up into that 30, push towards the high, impulse down back into the prior day's point of control, shift down to the overnight point of control, and extend the 35.10 down and start moving towards 3,500. Might poke through the 3,500 and come back in. If it does not, then it's likely to target the 91 quarter, and then the 91 quarter is likely to invite a slip and slide into 34, the 34.85 area. So this is a much bigger scenario. This is basically a kind of a tweezer top type of scenario where we go rally and then the next day take all of it back. We've seen that happen quite a bit. I'm ready for either one. The question is, how does it test the 30? How does it test the 10 beneath us? Does it hold the high volume range above us, or does it slip into the flagpole, the strong trend area, and then now we've got room all the way down to the 80, 74 double top right down here. We've got room for that. So 74, 80, these areas get into play. Otherwise, it's 48.50 up above. Okay? So, really important to keep a very close eye on the market on the open. Relax. Look at your longer time frame. Today is a good day to look at the longer time frame. Keep your 15-minute in view. 15, 30 minutes, some higher time frame than 15 minutes. Do not go below that, and really judge the market for what it's accomplishing versus looking at what it's doing on a tick chart or in the short range. It really is easy to get lost in the minutia of the short range. Okay, so good luck today, and I'll catch you tomorrow. Hopefully you pick something up. Take care.